Hey guys, my name is Chris and welcome to this scale up from idea to exit. Now this is a short pre-brief before our session together later this week in Switzerland. Now in Switzerland you're going to meet myself, Enrico and Rick, and we'll be working with you for the entire afternoon session here on Thursday. Now very briefly, the three of us, we have deep experience working with startups and scale-ups, VC funds and ecosystems all around the world. Rick and I have a combined 5 IPOs together. We have been building venture funds, we've been building angel networks, and we've been developing both startup founders, accelerators, incubators, and venture funds all around the world. And that's really our big mission here. We are working hard to help build better startups around the world. And we work with startups, we work with accelerators, and we work with ecosystems. So some examples: Solar Duck, company I started working with a couple of years ago, now getting ready for a significant scaling phase. Catapult, Norwegian ecosystem, Canadian ecosystem, the Swiss ecosystem. And what they all have in common is they have worked with the same method and the same methodology as you will be working with during our session. And what is this methodology? Well, we will be taking you through a series of canvases, a series of cards, and a series of simulation activities that really puts you into the shoes of a startup founder going from idea all the way up through exit. This is an in-person simulation that we have run multiple times at ecosystems all around the world, or you can switch and run it completely virtually, completely digital. We, of course, will be meeting and doing this in person. And it is, in our experience, the most powerful method that we have ever developed, working with startup founders, helping them understand the journey and the stages of going from idea all the way up through an IPO. And as we work through this, you will be doing different exercises, you'll be working with different canvases, and you will be going through all the steps that a real-life startup founder will do. So, here is a short pre-session introduction that helps you get ready for our session. So high level, can you take your startup in the simulation from idea to exit? And do you have what it takes to scale up? And can you do this in a highly competitive environment where you will be working in teams, competing with other teams in real time to scale and exit your company? So the scale-up methodology is developed to build better ecosystems, build better accelerators, incubators, and startups all around the world with a strong focus on investor readiness and value creation. It's developed by myself and my team based on more than 20 years of experience working with startups all the way up through IPO. Now, we have run more than 300 sessions globally with these strategy sims, where we go into classrooms and boardrooms, incubators and accelerators, ecosystems, corporations globally to run these scale-up sessions. So scale up in 30 seconds. You guys on Thursday are the 2 co-founders of a startup. Your goal is to build and scale this tiny startup to a successful global scale-up. You're going to build product, you're going to build roadmaps, you're going to raise multiple rounds of investor financing. And to win, you need to build a 50 million syndicate and make it over the finishing line. Along the way, you're going to meet booms and busts, investors, super angels, advisors, and all sorts of challenges that you would commonly meet in real world. Now, a couple of practical things. First of all, your roles. So you will have initially 2 people on the team. You will have a founder CEO and a founder CFO. One of you needs to be able to lead, the other needs to be able to count. That's all we ask. If you are more than 3 or more than 2 people, you'll have co-founders and maybe also board members, just like you would in real life. And those roles on Thursday, you will be having and working with your fellow participants. Now, the case you're going to be working with is called a new energy landscape. It is basically framing the context of how the energy and climate tech ecosystem is changing and what kind of startups we can build within that space. We do recommend that you read this in advance. It's 4 pages, 5 pages. It's really quick, but read it in advance to get your mind started. You will also be receiving a company card. Here is an example of such a company card. So you can see here, this is company card Scale Up, Clean Energy Tech DPAC. DPAC is a circular economy battery company. It's built on a real life company that I've invested in. And this is the opening information that you receive. Now, the core of the Scale Up simulation is this. You're going to be meeting a lot of different investors. Some of these are good, some of these are bad, some of these are easy to work with, some of them are complicated to work with, just like in real life. Now, there are hundreds and hundreds of different investors from all over the world, and you'll get a chance to really dig through these during the session. So if we look at what we have here for a second, you can see the first one is a founder cash and credit card. So your bank offers a personal loan, $500,000 at 20% interest. Now, could that happen? Yes. Is it a good choice? I don't know. Crowdfunding. So you'll see here that you have a Facebook group. You go for a crowdfunding round. You get 243 new investors where you receive $300,000 at $3 million pre-money valuation. Now we get into the mechanics of pre-money and post-money valuation, raising equity versus taking on debt. Or you have a different crowdfunding where you're doing a Kickstarter campaign. It costs $2 million to launch, and you're raising $22 million at $50 million pre-money. So you can see there are two crowdfunding, but they're very different in terms of the fundraise and the valuation that you get. Or you can look at the business angels. Here we have 4 local angels. They are willing to invest $3 million at $6 million pre-money. And some of you should understand the mechanics of why that would be bad. Or you have a less capable business angel suggesting a $1 million at $12 million pre. So again, different investors. Now, as you progress through the simulation, you'll meet very different kinds of investors. And these are all built on real life. And if you look at what we have here, we have Wingman Ventures, it's based in Switzerland, Broodstock Capital, based in Norway, EU's massive growth and scale-up fund. You have Disney's CVC arm, and you have a small VC fund within an innovation cluster. Now, these are different investors, and you had to figure out who are the right investors for us and which deals should we be going with. Or as we progress, you're going to meet what we call the super investor. So here we have the EU's growth fund. They're offering you a massive investment, but in a very complex deal structure. So now you got to unpack the deal structure and say 20 million grant, 10 million loan, 0 equity. 10 million grant, 20 million loan, 10 million equity. And then 10 million grant, 0 loan, and 70 million equity. Now they're priced on previous rounds, and you need a mini press release. So here we have a little bit more complicated structure, but nothing that you guys can't handle, right? So some of the questions that you would cover that is important for real life incubators and accelerators to be working with their startups on. Questions like, who are the right investors for you? We work through different canvases like the investor map, the long-term funding map. And we ask, what are the right growth strategy? Here we work through the scale-up map, outcome canvas, rocket ship canvas, and these are canvases, of course, you can take back and you work with your real-life founders. We also dig through cap table and cap table math. Of course, some of you probably are very familiar with this. And we look at which angels makes more sense from a strategic point of view and which ones make more sense from a dilution point of view. Both very important aspects. Now, you can run this in person, like we are, or you can run this completely virtual, completely distributed online. That choice is up to you. Now, what will you experience? So you will experience really the complete journey going from a startup founder to a successful, hopefully exited founder. It's complicated. It's difficult. You'll face dilemmas and hostile competitors and demanding investors and complex deals. And you'll run out of cash. Of course you will. Every startup does. A lot of people get overwhelmed. But this is what it's like to build and scale a successful tech company today. Now, for outcomes and for all of you guys running accelerators and incubators, this should be quite important. We really want to make sure that you guys will understand the full journey from idea to exit. and we want to make sure that you can think more strategically for startup. And we want to make sure that you're comfortable understanding about early stage and later growth stage investors. And then we're going to get into the terms around value creation, deal-making skills. And of course, we hope that you can gain some new insights and takeaways that you can take back to your real-life accelerators. Now, how to succeed, and to wrap up this introduction, there's a couple of things you need to be able to do. Number one, you need to be able to work strategically and handle challenges. If you just go with the flow and you don't make good decisions, well, you're going to end up in a bad place. Second, you have to understand investors, investor cards, and crack what we call cap table math. And finally, you have to master value creation. We're going to go through this in the simulation itself. But in the middle of this, at the core, is really teamwork. You have to be able to work well with your team, collaborate very rapidly, make decisions very quickly, and try to make good decisions. Now, for preparation, there's a couple of things we'd like you to do. Number one, we do encourage you to read this 5-page case study, and you should have it in your inbox already. We encourage you to watch this introduction video, and we have a short pre-work exercise for those of you that are not very familiar with cap tables. If you are a cap table pro, you can just skip through this really quickly. So, here we go for a pre-session exercise. It's only applicable, only relevant for those of you that are not really familiar with cap tables. If you know how to do cap table math, perfect, you're done. All right, so your exercise really quickly. Your task now is to complete the cap table math for a company called Hypercare. If you need a guide, you can check out this YouTube link right here, and you should be able to find it in the presentation. And that will take you through a 15-minute guide on the details of cap table math. For those of you that don't need it, I don't think most of you guys will need it, we're going to introduce you here to a company called Hypercare. You have 2 co-founders. They put in $250,000 equity each. They now own 50-50 company. Then they go into an accelerator. This is a leading accelerator in Oslo, Norway. The accelerator invests $1 million at $10 million pre-money. Now your exercise is to complete the basic paperwork. Now use the next 2 pages to update the cap table, run through the math right here, and then update the cap table right here. Again, for most of you working in an incubator or an accelerator, this should be quite easy. If not, take this as a practice round, and we're going to work more on this together when we meet on Thursday. So once you completed that, well done. You're now ready for the full scale-up simulation. We're going to be working together on Thursday, and I'm super excited to get a chance to meet you all. So thank you, and we'll see you in Switzerland later this week. All the best.